Recording in progress.
Robotic platform for implantable moving and onboarding the virtual activity for good.
All right, guys, if you can hear and see the screen, can someone put a 111 in the chat? Just want to make sure that my mic is working. If you guys can hear me and see the screen, can someone put a 111 in the chat? All right, you guys can hear. All right, good, good. All right, if you've been on a live group call, you know how these calls go. Going to talk a lot about the slingshot strategy. We're going to talk a lot about liquidity, and we're going to talk about market phase. I've been doing a lot of one-on-ones, and I think the understanding of market phase is what a lot of people are not really grasping. So I'm going to try to explain it as much, or at least as clear as possible in this training. I know I haven't done one of these in a while, and the reason behind that is just I'm very swamped with one-on-one trainings, and to me, I think the one-on-ones people get a little bit more out of it, but what I want to start doing is giving more people who are not members opportunities to get on the call and at least kind of see, you know, what the strategy is all about. Because I think people are still kind of misinformed about the trading system, thinking that that's you know, their cure to, you know, they're losing, you know, in the markets. This trading system is not your saving grace. It's the strategy. All the trading system does is help confirm analysis. I'm getting a lot of messages about, you know, signals uh, repainting and this and that, but you're on a 1 minute time frame trying to place trades, and you can do that, but you still have to understand the strategy. That comes first. All right, understanding this is what's first, and then you come to the system. Because you know, if you try to rely on the system without an understanding of the market, you're going to take some wins, you're going to take some losses, emotions are going to come into play, and then what's going to happen is you're going to end up blowing the count based off of using the system inappropriately, right? So definitely want to, you know, make that very clear. System confirms analysis. That's honestly what any indicator that is provided by any system, that's all it's for. It's to help you confirm an analysis, not to, you know, be the answer to, you know, are you, you know, going to win or lose a trade. All right. So kind of want to make that clear. All right. So what we're going to get into first, not so much the system, but actually, you know, how I see the market, my thought process, and you know how I analyze charts, and you know what I think the market is versus to you know what you may think the market is. All right. A lot of people look at the market differently. Because I trade US 30, I look at US 30 and NAS 100 a little bit differently. My concept of how I use this pair is probably a little bit different than other people. But what I try to do is work hard. I mean, work smarter, not harder. And this particular pair will allow you to do that if you're not greedy with it. All right. So let's just dive into what the market to me actually is. All right. And it's based around what I call a universal pattern. All right. Now, the universal pattern is um, all over your chart. You're going to see these patterns on the weekly time frame. You're going to see them on the daily, 4 hour, 1 hour, all the way down to the 1 minute. You'll use the same exact patterns over and over again To analyze the chart to get a directional bias, you'll use it to enter trades. All right. So I'll show you examples of all that. But before we do that, we kind of have to get an understanding of what the market is. All right. Now, I'm pretty sure you guys know that in a downtrend, right, the market makes lower lows, lower highs, lower lows, lower highs, and lower lows. And I know you know in an uptrend, the market makes higher highs, higher lows, higher highs, higher lows, and higher highs. Now, when we looked at this on a chart, say on the weekly time frame, right, you can see that the market makes higher highs, higher lows, higher highs, higher lows, and higher highs. And that's how you would read this on a weekly time frame. All right. Now, when you're looking at this on the daily time frame, right, and you come to this side of the chart, this is going to read higher high, higher low, higher high, higher low, and so forth. All right. So when I go back to the weekly, the same way I'm reading this huge data, you read the daily time frames data the same exact way. All right. So this concept, right, you have to be able to take this concept and break it all the way down to this area where the market is and use those same type of tactics or market structure movement to understand what the market is doing. All right, it's all over the chart. So if I were looking at the market and it was in a downtrend, right, we know the market makes lower lows, lower highs, lower lows, lower highs. If you look at it on the daily time frame while the market's trending down, notice what we have: lower low, lower high, lower low, lower high, lower low, right? So this is on the daily. So imagine if I come way over here and I'm looking at this bit of price action, right? And I go all the way down to 15-minute time frame. All right, we'll go to 30-minute, right? Do you see how I'm going to read this data the same exact way? Lower low, lower high, lower low, lower high, lower low, right? So when I say that the market movement and the patterns are universal, this is what I'm talking about. All right. You have to understand that what you see on the weekly, daily, right? You're going to see the same exact thing on the lower time frames. And this is where you guys get lost. All right. Now, these moves that you're looking at, right, when you're on these time frames, you're looking at the biggest peaks on the time frame that you're on. So you're looking at this peak, that peak, this peak, right? You're looking at these areas in the market, right? To get an idea of what the agenda is, where the market is going based off of the trending market of that time frame, right? And this is where I say like I'm telling you, a lot of people get lost. You have to understand that once you're able to identify this structure and see it clearly, you'll get a better idea of where the market is going within the New York session, because that's all we have to work with. All we have to work with is what the market could possibly do within this box. If that's the session you're trading with, if you're trying to be a day trader. Okay. Now, going back to the diagram, what you have to understand about, the market moving in a lower low, lower high formation or a higher high, higher high formation is the fact that these moves, the way I see it, is the market taking and creating liquidity. Right now, if you don't know what liquidity is pools of money that the bank or algorithm, whatever you want to call it, takes when you place a trade. So if you place a trade and you're prone to getting stopped out, that means your liquidity and the market is taking your money. All right. Now, in a downtrend, when the market makes an impulsive move like this from here to here, this is the market taking liquidity. When the market pulls back, that is the bank creating liquidity. And the reason for that is because we're taught to trade off of support and resistance. So if this is an area of support, right, and we see this and we see it as an opportunity, we're going to buy, right? And when we buy, we put a stop loss below our entry, and what happens? We protect our trade. Now, not only will one person buy, but multiple people will buy because you're not the only one trading in the market. And what happens is the market will pull back on a higher high, higher low formation, creating a pool of liquidity against the trend, right? A lot of people counter trend trade. It's common. But what happens is if these people, buy and their take profit points are up here and they're married to that take profit, well, these stop losses, when the market actually gets back in line with the trend and where the market is going, where its particular agenda to go is, they're going to get stopped out. And that is how this leg is taking liquidity. All right. And then once we take liquidity, we go right back into the same phase. We start to create it again by pulling back against the trend. And that's the reason why the market makes lower lows and lower highs in a downtrend. So understanding the science behind these lower lows and lower highs will give you, a better idea of, where would the market be going if we're in this phase of taking liquidity, or where would the market be going if we're in the phase of creating liquidity, right? And it's most important to understand this on a higher time frame, okay? Now, same thing in an uptrend, we have higher high, higher low, higher high, higher low. And when the market hits an area of resistance, right? Retail traders, which is us, if we see that area of resistance as an opportunity, whether it's high probability against the trend, or low probability against the trend or higher probability, we may take this sell. But if we take this sell with a take profit that's down here and we get back in line with the trend, well, our stop loss that we put above our entry becomes liquidity. And whoever jumps in along with you, like say I call this trade and I say my take profit level is here and all you guys jump in with me, well, we are all liquidity that can be taken out by the bank. And what happens is once we're all these red arrows, what's going to happen? We're all going to get stopped out. We become liquidity. And it's just part of trading. That's just what happens. So the goal would be is to understand what phase the market is in, know that we probably shouldn't be looking for take profit levels if we're going to take a trade like this, or just wait for the market to get back in line with the trend, or break structure so we know that the market is shifting and we can look for opportunities to the downside when the actual trend has changed, right? So it's going to be a catch 22, either way. If we see an opportunity, we may take it, but we have to understand what we're taking and why. And a lot of people don't know what they're taking and why because they don't understand what phase they're in overall in the market. All right. Now, the slingshot strategy is basically how I draw these lines on the chart. If you've seen my posts, I usually have a pattern that looks like this. I'll have break of structure. I'll have a pullback to an area of support, and I'll have it marked with these lines. So when you see that the market has broken above a high, I'm going to draw that line. When I draw that line, that is what I call a break of structure, BOS. Now, after every break of structure, right, whether it be to the upside or the downside, right, we know we're going to have a mixture of sellers and buyers. Now, in a downtrend, we're going to have a mixture of buyers and sellers, and we know that the buyers got stopped out in a downtrend. In an uptrend, we're going to have a mixture of sellers and buyers, and we know that the sellers get stopped out in an uptrend. So if we track those, right, then we know that the market is now in a push phase, right? And this phase right here on higher time frames can last quite a long time, which means that this phase is going to move in a higher high, higher low formation on lower time frames. Okay. Now, once the market shifts, we're going to have some form of a break of structure within this uptrend. And that's when you have the opportunity to write RTP or RTD. Now, if you don't understand what RTD and RTP means, RTD is just how I identify liquidity. It just means a reason to drop, right? Once the market starts pulling back against the trend, if we don't start breaking highs, this initial buyer plus all the people who bought that pool of money becomes liquidity, right? So it's a reason for the market to go from this area at the top of where the trend starts towards the RTD. That's all that is. All right. So RTP, reason for the market to push. RTD, reason for the market to drop. All right. Now, once the market creates liquidity, right, we're going to look for an area of imbalance. Now, an imbalance is basically what you'll see is normally in an uptrend, you'll see a picture of bullish candles, multiple bullish candles. You'll see gaps between the wicks, and then you'll see an area of support or an area of resistance, and you might and an order block, right? So you're going to be looking for that area because that's usually where the market likes to travel to, right? So once the market hits that area or comes into your area of interest, you can draw this line and that completes your pattern. Now, as long as price doesn't break above highs or break above this line, we're going to look for multiple rejections in this area. So when we place the trade, we place the trade toward the RTD. Once the market pulls back to that area of support, filling imbalance, and an order block, you may see some rejection in this area, multiple rejections. Then we'll look for entries towards the RTP down here off this support level. So when you do this, right, your stop losses can go a few pips below your entry aggressively or conservatively below previous structure. And the same thing for your sales, right? A few pips above the entry to keep a tight stop, or you can put it above previous structure, enter with a smaller lot size, and as price action develops, you can add a position with a more aggressive lot size, right? But this is the strategy right here. This is the pattern, right? And it's universal, guys, right? You're going to see me draw this pattern on the weekly time frame, the daily time frame, the 1 minute time frame, right? And what I'll show you is that once you have a directional bias and you're able to draw this pattern, then we can use the system to check to see if it agrees. Now, we don't rely on the system, right? But in my mind, if you're analyzing the chart correctly, it's too much of a coincidence for multiple confirmations to line up along with your strategy or your analysis. Okay. All right. So let's look at the chart again, right? And I'm going to kind of explain to you, what I see on the weekly time frame, all right, and why it's predictive, right? Now, on the weekly time frame, we already established that this area right here is a high, right? That's a low, a higher high, a higher low, right? And then this is our higher high. So if that's the case, then I should be able to draw my pattern on the weekly time frame. And notice all of this is a break of structure, right? So I have a mixture of sellers and buyers. We know that these sellers got stopped out the moment price broke above this high, and the market went into a push phase. Now, remember what I said in the diagram. This area right here, once the market breaks above a high on a higher time frame, it's going to move in a higher high, higher low formation. Now, notice what it did. It made a higher high, a higher low, a higher high, a higher low, a higher high, and so forth, right? And then the moment structure was broken, we changed direction in this area. We had a break of structure and a failure to break highs. Now we're doing what? Making lower lows and lower highs, and we're creating liquidity. We create liquidity all the way down to a level of support. Notice there's imbalance. There's no wicks in between these two candles. You can clearly see it's multiple bullish candles in that area. And there's our support level, right? So as you can see, we have this pattern on the weekly time frame, right? I can mark it up the same way I did in the diagram. And if you've been on the calls before, you've seen this before. Right, so this is going to be your BOS, right? This would be RTP, right? And then down here is that area of support, right? Where we filled in balance and the market has to do what? The next phase would be for it to take out the RTP. And as you can see on the weekly time frame, what did the market do? It took out the RTP. Now, this same scenario that happens on the weekly happens all over the chart, guys, all over the chart. It's going to happen within every phase that the market is in, right? Now, notice once the market broke above this high, right, we went into another bullish push phase. And that's the phase we've been in overall for quite some time, right? We're still in this phase before we got that break of structure in this area, right? Notice we haven't had any breaks of structure. So we're still in a bullish push phase. Knowing this is what's really important, guys. That way, every time you see a candle like this, you don't think it's a reversal and looking for, take profit points way down here somewhere when the market is not ready to do that. You see what I'm saying? Now, the same way that we're in a push phase here, we could be doing the same exact thing on the daily time frame. If I were to read this data on the daily time frame, I could look at what phase the market is in above highs the same exact way. And I'm going to show you what I mean. All right. Now remember, on the daily time frame, this is the data that we'll see to see how it's in large. I still understand that we're in a bullish push phase, right? So I know that we're still making daily highs and daily lows, right? So notice if you look at the weekly time frame here, because you see a better view of it, right? The market made a higher high, a higher low, and a higher high. And the moment price broke above this high, right? What did the market do? It went right back into a bullish push phase. So if I go to the daily time frame, right, you can see that above all this, above this, excuse me, this high, right, above this high, we were bullish, right? Look, higher high, higher low, higher high. So each one of these days, we can kind of see, what the agenda is. The agenda is always to go higher as long as lows don't get broken. And as you can see, no lows got broken, right? That low didn't get broken while we were above this high, right? This low really didn't get broken. We had a couple of wicks, but no bodies, right? That low didn't get broken. That low didn't get broken, right? We remain bullish. So when you're analyzing the chart, right, you can still kind of see, okay, well, the agenda is still to go up as long as structure doesn't get broken. So taking sales would be lower probability going against this trend, and the overall trend is bullish. Now look what happens again on the daily time frame. Remember, this is a daily time frame. We break above this high. Market goes right back into a bullish push phase. Now we did have some bearish momentum, but these are your lows, right? And you have to look on the higher time frame. That is a low, right? So if this doesn't get broken, we're still bullish, which means if you took a sell, right? Well, you're going to most likely lose that trade because we had no confirmation that the market would be selling. You see what I'm saying? So if we go to lower time frames and we start reading data, right? Once we start to look at these sessions, New York sessions, right? Because now we can see, what phase the market is in leading into these sessions, we can make a decision on where the market should go long term, right? So this is where, things get tricky, right? So if I were looking at this particular day right here, right? We're going to look at this day and I'm going to go to the 1 hour time frame, right? Do you see how big things get? You see how you could forget what phase the market is in because now you're reading this data and you're making decisions on what you see here and you're confused, right? And this is where you get lost. You have to remember that when you were on the 4 hour time frame and when you were on the daily time frame, this is what you saw. You see what I'm saying? Right? You have to remember that this is what you saw. So what I see that the market made a higher high, a higher low, a higher high, and a higher low. So if it made a higher low, I'm looking for the market to make a higher high. So if I go to the 1 hour time frame and I go back to where that line was drawn, right? I have to remember that. I have to remember that
Huh?
this is the trend, right?
Church stuff, listening to a guy talking about it.
Can you mute or I'm going to mute you? All right. So notice I'm still reading this data the same exact way, right? Higher high, higher low, higher high, higher low, higher high, higher low. Remember what I said? We're looking at the big peaks. We're not looking at intricate stuff in between these candles. We're looking at the big peaks, right? So the market being over here, if I read the data over here, I can see that this is your high, your low, and your break of structure. So watch how I can draw this, right? Actually, I already have the low drawn right here with this blue line, right? Now, what comes after the break of structure? We create liquidity down to a level of support. So see how I have the same exact pattern. BOS, RTP, right? And we're at the support level. Remember what I said, we're going to hit this level probably multiple times. Once, twice, three times. So at the beginning of the New York session, with the trend being to the upside, what would your direction of bias be in this area? Your direction of bias should be what? Bullish. Towards what? Buy side liquidity, right? Just like this diagram. You want to be bullish towards these areas of liquidity, right? Everybody who sold against the trend should be getting stopped out. And as you can see, what happens? We respect this area of support. Notice we did pull back, filling imbalance. You see the gaps in between the wicks, just like the diagram. Gaps in between the wicks. And what does the market do? Market goes up and takes out buy side liquidity and takes out the RTP. All right. And this is what I mean by understanding each phase of the market. All right. Now, say we came to the chart and the market was right here, right? At the beginning of the New York session. Say you come right at the beginning of it and this is what you saw, right? So you would look at the market the same exact way. Go to the higher time frame, right? And you could see the data. Look, higher high, higher low. We know that above this high, the market should be in a bullish push phase, right? Because no lows have been broken. So if we broke above a high, we could only go higher until the market gives us a sign that we're going to go lower, right? And then the data is already there leading into this session. So if I go back to the 1 hour time frame, right, you could clearly see that when we broke above this high, we went into a bullish push phase. Now we already bought from here to here, so there's no point in chasing more buys, right? Even if it went to the moon, we shouldn't chase that. We need to wait for the market to do what? Create liquidity so we have something to trade towards, right? But notice, leading into this session, what is the market doing? The market started to make lower lows and lower highs. Look, we have a lower low and a lower high, right? Now, in this area right here, we could clearly see that most likely what could happen, we could break above highs and go higher, or we should go lower and we have clues. For one, we have tons of imbalance in this area, and we know what typically the next phase of the market is because we have the diagram. Look, high, low, break of structure. After the break of structure, the next phase is to create liquidity. So we could trade this phase. We know that we're going into this phase at some point, right? Because the market already bought. It already bought from here to here, right? So what has to happen? Just like I showed you on the weekly time frame, right? Right? Remember over here, we have to see a break of structure of the previous move. So you can just read it out. Higher high, higher low, higher high, break of structure. So look at it on the 1 hour time frame. Look, higher high, higher low, higher high, higher low, higher high, higher low, higher high, break of structure. This broke below this. There's your break of structure, right? And when you get that break of structure, you want to see a break of structure that leaves a fair value gap. And you can clearly see it in this area right here. Look, there's a gap in between that area. So that's a good sign too. Now the market could still break above this high. Don't get me wrong. It still could break above this high and negate this fair value gap. But at least we have that break of structure and we have that gap there to possibly trade off of, right? Now notice, remember what I said, the pattern is universal. If you have any types of breaks of structure, you should be able to draw the pattern. So look, low, high, break of structure. What is the next phase? To create liquidity, filling imbalance, and we should see rejection in that area. And what happens? We have an order block, we have the imbalance, and we have the rejection. Remember what I said, universal. Now this becomes your RTD, right? And you can look for entry towards the RTD and towards this imbalance, still knowing we're trading against the trend because we know the trend overall, because we saw it in the 4-hour time frame, we're bullish, right? So we know we're not looking for any type of crazy take profits down here. We're looking to just fill an imbalance, hit an area of support, and then see what the market does in that area. But do you see how the market works in each phase? You're going to be either taking liquidity or creating it, right? Now, we can typically leave this trade and say, okay, we're not going to trade against the trend. And that sets us up for where? Where the market is going to go the next day, which will be in line with the trend towards our RTP. Do you see what I'm saying? That's how the market works, guys. When you can read the chart like that, it makes things so much clearer, right? Now, in these same examples, I'm going to put the system on the chart, right? I'm going to put the 1 minute scalper on the chart, and I'm going to go to these areas and mark up the chart the same exact way, all right? So let's see. All right, so we'll do the one we just did. So remember we had the break of structure above this high, right? We know the market went into a push phase, and we know the next phase is to create liquidity, right? So if I go to the 4-hour time, the 1-hour time frame, and look for that same area, right? After I've marked the chart up, right, we're right here. So we know that above this high, we're in a push phase, right? And this is the day we're looking to trade right here, right? We're looking to trade on this day. I don't have my days of the week up here. So, but as you can see, right, already, look, if I had the diagram drawn same exact way, that way you're not confused, right? This is BOS, RTP, right? We know what comes after the break of structure. We create liquidity. Now you see how the system's confirming. Look, you can see it. I know you see it. Look, double arrow confirmation, right? Moving average has turned black, right? After that break of structure. Takanashi has turned pink. We have a bearish spike. Stochastic is overbought, and the XP4 flips when this candle forms. And our directional bias is to do what in this area? I'm gonna go 30-minute time frame so you can see it a little bit better, right? Is to sell, right? And you see what pattern I have here for my entry. I have my low, my high, my break of structure, my pullback to that imbalance, RTD. This is what I have drawn up, and this is what the system is saying. What are you gonna buy right here? Would you buy? This is what I mean by the system confirms. You see what I'm saying? All right. Now going into the next day, right? Remember what we said. Overall, right? We're trending up at this time, right? We just broke above this daily high and we went to the 4-hour time frame. We could see that we're in a push phase, right? Market has pulled back, and then leading into this session, we have our pattern, right? This is data that was already read. We have our high, our low, our break of structure. We know the next phase was to create liquidity. Leading into the New York session off the support level, we already see bearish momentum. And now we're in the leg of doing what? Oops. We're in the leg. Let me get rid of this. Of doing what? Taking out buy side liquidity, right? So we've already started to push up, right? Which means in the diagram, we've already started to do this move, taking out these red arrows of the diagram, right? So if I go down to the 1-hour time frame and I look at the New York session, right, on this day, right, I already know what my agenda is. My agenda is to take out RTP and the buy side liquidity that it created. So when this person sold, there's a stop loss there. Stop loss, a stop loss, a stop loss above these wicks, this candle, that candle, right? So when this came up, this already stopped out all the people who sold within this price action here, right? So where would you think the market is going? Up. So how does this system verify that? Look at the arrows right here. Look, we have a bullish spike, stochastic oversold, XP4 flip. We closed above all 3 moving averages, right? What are you going to do? You're going to sell? No, you're not going to sell. You're going to hop into that trade, and all you would need was 500 points. You got that right there. Leave a runner, and you've made a bag, right? You probably get out of the trade right there. That's 2,100 points. Leave a runner. Next day, you're in profit and RTP has been taken out. System is confirming the analysis. Do you see what I'm saying? That's how the system works. You have to be able to analyze the chart, right? And then I just use the system for confidence, right? Now, there's not going to be days where it's perfect like this. There's going to be some days where, you may wake up and the market may be still within that push phase, right? Say you wake up and the market is right here for this day, right? On this particular day. Well, you would analyze this leg in the market the same exact way. And if you look at the system, it's pretty blatant. The moving average is yellow, the Hakinashis are blue. And if you look at it on the chart, right, you have to remember that this leg will move in a higher high, higher low, higher high formation. That's how it's going to move to take out RTP. And unless lows start getting broken, we're not pulling back. So leading into this session, I would read this data the same exact way, right? I would say we had a higher high, a higher low, and I would do this. And this is what I mean by universal. You see how we broke above this high? Market is in a bullish push phase above that high. If no lows get broken, I'm not worried about it come back over here. I'm worried about it just pushing to the upside. And the lower the time frame I go, the better I'll be able to read the data leading into this session, right? You see how we're above this high? This is a bullish push phase above this high, the same way I showed you on the weekly time frame that above this high, we're overall in a bullish push phase. Remember what I said? It's all universal, guys. It's all universal. So when I look at the session, all I know is we broke highs, right? So at the beginning of the New York session or, stock market open, if I'm looking to trade on this day, I'm still going to read all the data that's above this high like an uptrend. Higher high, right? Higher low, higher high, higher low. So I don't know what time this is. This is around, right? So that's around 8 o'clock. So say there's a news event right here or something like that. I normally wouldn't take trades at this time, but just say we did. This is what we saw, right? Remember what I said. We use this pattern for everything, to analyze the chart, to enter trades, right? Look, at the beginning of the session, we know what the agenda is. At this point, we have not taken out RTP yet, right? So we know that the agenda of this whole leg is to take this out. Now, we don't know what route it's going to take, but we already know what it did. It went above this high. So look, read the data. Higher high, higher low, higher high. So right here, we had a break of structure, right? That's a break of structure right there. So now we have a high, a low, a break of structure. This is your, I'm going to call it an ER, or you can call it RTP. ER just stands for entry RTP because I plan to enter, towards this, right? There's your BOS, right? And this is a BOS because, and I'll zoom in on it so you can see it. It's a BOS because this candle, actually, let's do it like this, right? These two candles broke above this bearish candle right here. So we went into a push phase, right? The next phase would be to create liquidity. You see you have your bearish candle, right? And I'm going to be looking for entry off of this support level towards the RTD, right? And the lower the time frame, the more data I'm going to get. I'm trying to not lose it all, right? And as you can see, if we get to lower time frames, we can see the imbalance. Notice, in between here, that wick and that wick is not touching, right? Just like the diagram, right? Not touching. Market comes back to fill that area. There's my support. Remember, multiple touches. 1, 2, you get into the trade. And what do? We take out the ER or RTP, and the market goes up. And there's your money, right? And so you see how that's caught. That's caught because we understand what this leg in the market is and that it just wasn't finished yet. The goal was to take out RTP. We were en route. It showed no signs of turning to the downside. And if it did, we shouldn't chase that because we would need a whole break of structure or pullback in the RTD. And we understand what the trend is. right? And that's how you get into these trades, guys. And then after this, it's just a vicious cycle, right? I'm gonna clean all this up just so you can kind of see it again, right? All right. So look, market goes up on that area again, so you can see just so you can see how these phases actually play a role. All right. So look, this is the leg we were just analyzing, right? We just analyzed this day, right? So look what happens. We break above highs, right? We broke above this high, right? And then look, that's a low, right? High, low, this is all a break of structure, right? And then what's the next phase after the break of structure? To create liquidity. You see what I'm saying? Right? And it's going to break liquidity, right? But still remain in a push phase, right? We still remained in this push phase until structure was broken. As you can see, we made a higher high, a higher low, a higher high, right? And then we made a low that broke structure. All of this broke structure, this whole move. And it's weird because it broke structure. And as you can see, it kept going, right? You see how it kept going? And it kept going because once we broke below this and below this, we went into what is called a bearish push phase. See? Made lower low, lower high, lower low, and it just stayed in that phase until we pulled back and broke above a high, right? Right. So I'm hoping that you guys are kind of grasping that. We're going to go over um, the market phases in a little bit more detail, but that's the part that used to trip me up and make me wonder why do I keep going in the drawdown? And a lot of it was just from not understanding the phase the market is currently in, on higher time frames. Okay. Now, market phase, guys, you can see it clear, right? In a downtrend on the higher time frame, when price breaks below a low, bearish push phase, right? This phase is going to move in a lower low, lower high formation. So if you see a break of structure or price has broke structure on a daily or a weekly time frame, be prepared for the market to stay in this phase for a few candles before it pulls back because it's on a weekly or a daily time frame, right? Same thing in an uptrend, break of structure. On the weekly, we'll stay in this phase long term. On the daily, we'll stay on this phase for a few days. So make sure you trade that phase accordingly. Same thing when the market starts to pull back. We could be in a pullback that's creating liquidity against the trend on the daily and the weekly, which means on the weekly, we're going to stay in this pullback for a couple of weeks or a couple of days if it's on the weekly or daily time frame. Same thing in an uptrend, we could actually stay within this pullback for a couple of weeks. If it's on the weekly, sometimes even a couple of months on the weekly time frame. As you can see here, we stayed in it for a long time, right? So, you know, you have to understand what phase we're in so you know what to expect, right? Don't be trying to trade in this phase, trying to take profits up here if it doesn't make sense. Okay. All right. So market phase, let's look at it a little bit more detail, right? We'll look at something a little bit more current. I'm going to clean this up. All right. So let's look at, where the market is now and why, right? So, when you come to the chart, do you understand what this leg in the market is, right? What is this leg, right? Why are we doing this? Well, look at the market on the daily time frame, and you can clearly see, right? We have the market making higher highs, higher lows, higher high, higher low, 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 right? I know I said it all, but notice even in this area, right? Once we had this high and this low, and then this bullish push phase, what did we do? We broke structure and started creating liquidity, and we've been creating liquidity within this in between this consolidation for quite some time, right? The reason why I drew this down here is because of the imbalance in this candle and what looks like sell side liquidity, which did get taken. The data is already there, so I'm not going to use this as that area of support. We've already come past that. So I'm going to use this area as my support level. So if I draw the pattern up of what I see on the daily, right? Notice I always write the BOS and RTP because it gives me a clear view of what is actually going on, right? So if I draw this and I look at this, I automatically know that I'm in this phase of the market. I'm in this phase, right? We know that this is your RTP, this is your BOS. If you look at it on this diagram, I know that I'm in this phase right here overall on the daily time frame, right? So any type of opportunities, I'm going to be treating like a downtrend, but still understanding that this phase in the market is creating liquidity overall against this trend, right? And this is where, like I said, this is where you have to be able to read the data this way. So you understand when you get down here and you start seeing this price action, right? Because the lower you go, the crazier things look, right? Right? Look how crazy things look, right? You have to be able to understand what all this is. You see what I'm saying? Right? So leading into the session today, I'm going to read this data the same exact way. And I can see clearly that the market made a lower low, a lower high, and a lower low, right? So I could draw this break of structure right here and then go to the 4-hour time frame, right? I'll clean it up a little bit, right? And this is data that was already written, right? Remember, we're looking at the big swings. If I have a break of structure, that automatically means I have a mixture of buyers and sellers, and we know buyers got stopped out. So this is a break of structure, right? And this is an RTD, which was already there, right? I'm just reading the data, right? Now, notice after the break of structure, the next phase is to create liquidity, filling imbalance. Notice we already established a downtrend, and we can see clear imbalance in between here. There's a gap right here, right? And an order block that already got hit. So what pattern have I already drawn? I've already drawn this pattern, right? A pattern to the downside. So my direction of buys is bearish, right? Now, granted, we're talking about this particular day, but I know what the agenda of the market should be. The agenda should be to take out RTD as it is, right? Until highs get broken, the market's agenda should be to take out sell side liquidity. Now, leading into the New York session, right? The market is going to do what? It's going to go into the phase of taking liquidity. So in the diagram, this phase is going to move in a lower low, lower high, lower low formation, right? So what did the market already do leading into this day? It made a lower low and a lower high. And what was it doing leading into the session? Making a lower low, right? So as I see this, I'm going to go down to lower time frames, right? I'm going to go to the 1 hour and I'm going to kind of look at what do I see leading into New York session. And what I see is I see a lower low, a lower high, a lower low, right? A lower high that failed to break highs going against this trend, right? And I see a low here. Now, my goal is to get to the RTD and to take out sell side liquidity. And at this point where the market at the beginning of the session, this is all sell side liquidity. I'm going to put an arrow where it's at, right? This is sell side liquidity. Below that wick, this low, this wick, here, 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 all the way down. All that is free money, right? So in order for the market to trade towards this free money, what will we have to see? Because what is the market doing right here? It's trending up. It's making higher highs and higher lows and higher highs. So I can't buy right here. I mean, sell right here. I'm not 100% sure because what is the market still doing? It's making higher highs and higher lows. So if I buy right here, it's going to be low probability it's going against the trend. I want it to sell. So there's one thing that I have to see in order for the market to sell. We need to break structure. And what does the market do at the beginning of this at stock market open? We break structure. You see how we broke below this low, right? So watch, remember what I said, the pattern is universal. Once you get a break of structure, we use the same pattern for our entries. right? That's a low. Where's your high? I'm just going to use this high because that's what's closest. And I'm going to just keep marking my chart the same way I do in the diagram to hold myself accountable. BOS, RTD, right? I know when the market pulls back, it has to pull back, filling imbalance. There's a huge imbalance within that candle. We pulled back. If this is RTD, what is the goal? To enter towards, well, actually, this would be your ER. We want to enter toward that ER. And what is the overall agenda? To take out RTD. This was my trade today. Do you see how it took out RTD? Do you see? Now, in the process of me marking the chart up, does the system help confirm? Look, it did twice. It did it there. It did there, right? I have a bear spike. Stochastic was overbought. XB4 flip, and we closed. We were below all three moving averages when I was looking for the break of structure. Do you see? So if I see all of this, why would I buy? Do you see how it's a coincidence? Like it's too much of a coincidence for me to be wrong. Why would I buy? Do you see? Right? That's how the system works, guys. Right? And this is why I say it's just once you figure this out, it's best to trade US 30. I mean, where are you going to get 7,000 points? What other players can give you 7,000 points in minutes? And you only need 500. Like I could have literally got into the trade and traded this wick from here to here and been done with the day. That's actually more than five. That's 1,000 points right there. You see what I'm saying? Right. Right. I'm gonna keep showing you guys. Right. And keep showing you. Right. Negative chart. Right. Look at the day again. Look at the 4 hour again. Right. We're gonna look at Friday. I guess this was Friday, right? So look at Friday, right? We know market's trending to the downside, right? You have a high, you have this low, right? We know that this is a break of structure. We know we're creating liquidity. So I can draw a trend because we know that this particular move is moving in a lower low, lower high formation. So if I go to a 4 hour time frame, right? If the New York session started on this candle, right? Because that's the candle the New York session started at, I would just read the data, right? We know we're creating liquidity. We already established that, right? This is your BOS, this is your RTP. We're creating liquidity against the trend. We already know that's what we're doing overall. This particular move moves in a what? Remember, look at the big peaks, right? It moves in a lower low, lower high, lower low formation. That data is already there. We just read it. And if we have a break of structure, we have a mixture of sellers and buyers, right? Who got stopped out? The buyers. But draw what you see, right? Write it up. BOS. This would be RTP. It's already there. You know that that's what it is because the data was already, there for you to write this, right? RTD, right? We go down to the 1 hour time frame. Now we can clearly see the New York session, right? So after the break of structure, right? The next phase to create liquidity and to fill imbalance and fill the gap, right? And this is where the market is at the beginning of the session. We're right in this area, right? So if you look at the diagram, right? Let me make sure I'm looking at this right? If you look at the diagram, right? We know after the break of structure, we're going to create liquidity against the trend. So we know that this is the phase we're in on the 4 hour time frame and the daily time frame, right? We're already in this phase, right? Market already started pulling back. So leading into this session, right? Leading into this session, all I have to do is read the data, right? Read the data the market is showing me basically right here. Remember, everything moves in a higher high, higher low formation or a lower low, lower high formation. So to create liquidity, we have to start making what? Higher highs and higher lows. Let's go on to lower time frames so we can read it. This was crazy. Read the data. Look, this is your low, and this is data that's already there. Remember what I said? We don't get here until we see this candle, 8 o'clock, beginning of the session, New York session, right? right? We already know what phase that we're in. So look, read the data. Higher high, higher low, right? Higher high, higher low. And if you go even lower, there's more property to read in between here. Let's go to the 5 minute time frame. Yeah. All right. So now we can even see more, right? And now we can see the big swings. Remember, we want to look at the big swings. If they're already there, we're looking at the big stuff, right? So notice we have the higher high, the higher low, the breakup structure, and then we went into a bullish push phase, right? We broke above this high and then we just went bullish, right? And even here, we started making higher highs, higher lows, higher highs, higher lows, higher highs. We're not going to do anything until 9:30, right? So 1630 is right here. Look what the market keeps doing. We're still in a bullish push phase, right? Notice we broke above this high and we never really broke lows. So look what happens, right? We're still reading data. Look, breakup structure, we made a higher high, right? After the breakup structure, we create liquidity, right? We did fill and bounce. We have 1, 2, 3 bullish candles, right? So this becomes your ER above this high. Now remember, right? See how you could look at this data and get lost, maybe think sales, right? Because of this bullish run, right? There's no point to sell if lows didn't get broken, right? That doesn't get broken. There's no point in selling, right? Lows don't get broken. But you notice I'm using the same exact pattern. Now, if I go back to the 1 hour time frame, you're not worried about those little candles. You got a clear view of where the market is going, right? We know the market has to do what? Fill and balance, right? Fill and balance. And what do you see right here? Look at all these bullish candles. I see clear imbalance up here. I see imbalance up here. And if you really can't see it, go to higher time frames until you can see it, right? Look, a clear gap in between here, right? And an order block, right? So we have tons of clues that we should be going to the upside. Now, if you're still not 100% sure and you don't want to take this trade, what does the system say? Right? Go 30 minutes. The system's telling you to buy. Look. And before the New York session starts, look at the moving averages. They're both blue. We have a bullish spike, so cash is oversold, and the XP4 had clearly already flipped. And where does the market go? It goes up and fills the imbalance. You only need a third of this move. If you entered right here, you could get out right there. That's 1,600 points. 3 positions, and you've already caught this without the stress of knowing if it's going to go that high. Because I took this trade, I didn't even catch all of it. I went from here to here, and I was done. I was like, that's good enough. You see what I'm saying, guys? This pattern is universal. Once you understand this, the system just helps you get into the trade with confidence. That's it. Too much of a coincidence for you to be wrong. All right. Look inside the chat. I haven't really looked inside there, but nobody's saying nothing. But right. All right. All right. So do you guys understand each market phase now? All right. We'll clear this up a little bit. All right. When the market breaks below a low like this, we are in a bearish push phase until we're not. Right? This is a bearish push phase. This is this. Is this. And the only way for this to get disqualified, a high has to be broken. Right? So once this high got broken right here, right? We're not in a bullish push phase anymore. A bearish push phase, excuse me. Right? Now we know we're going to go up and create liquidity. Right? You look here, when the market breaks above this high, Atlas consolidation, we are in a bullish push phase. See what I'm saying? And you'll keep seeing it, right? Break belows, bearish push phase, right? So if you trade this, you have to trade it in a lower low, lower high, lower low, lower high formation until highs get broken. Right? So I'm hoping you guys are grasping that concept, guys. Right? Now, I know I've just showed you US 30. This works on everything. It doesn't matter what you're trading. You could be trading gold. It doesn't matter, right? Just like gold right here. Above this high, right? The market has been in a bullish push phase, period. We know gold's been going up, right? But you can keep seeing no lows have been broken, right? So we're still bullish, right? If you look on the daily time frame, right? When we broke above this high, we went into a bullish push phase, right? So if you're trying to analyze, where the market is going to go within each one of these days, you have to read what the market is doing in this area while it's in this phase, right? So if you saw that, the market had broke above this high and you started to see the market selling off, right? You just draw your pattern, mark your chart up, right? Do this, RTP. And now you understand what phase the market is in basically for the next couple of days because we're creating liquidity, right? Now you go into these lower time frames where you can see the days, right? And you can just say, okay, how does the market create liquidity? In a lower low, lower high, lower low formation, right? And until we start breaking highs, we're going to stay within that phase. So if you're trying to trade on this day, or if you were trying to trade this day, right, to get into this trade, you could say to yourself, okay, well, I'm not getting into sales until lows get broken. Higher high, higher low, higher high, higher low, higher high, higher low, high, low. We break structure here. This is probably a news candle. You'd have to enter on that candle when it closed below, right? Now you're probably asking me, why wouldn't you buy right here? The only way to buy right there would be to break structure above to the upside, which means we'd have to have a higher high, a higher low, a higher high, and then a break of structure. We'd have to have this, a break above highs, and then a pull back into an imbalance, and that would be a continuation of the push phase. But we didn't get that. As you can see, in this area, we continue to make lower lows and lower highs. And the lower the time frame, you can see it, right? You see how we started making lower lows, lower highs, lower lows, right? Lower high, lower low, and then leading into the session, we had this low. So I could literally just do this. Break up structure, mixture of sellers and buyers, right? I can look for an imbalance, and there's an imbalance in between here, right? There's a gap in between here. So if I see that gap, if the break of structure creates an imbalance, then I'm going to look for sales and a rejection in that area. And if I don't get it and the market breaks above highs, then I can change my analysis to bullish. I'd still be chasing because the market already bought, but there's a strong possibility that we'll go higher and take out equal highs. Or if I don't get that, then I'll look to trade towards this RTD, which makes sense. Do you see what I'm saying? Right? Because once the market gets into a phase, it's going to move, it's going to stay within that phase. Just like right here, right? I don't know if this broke above the high. It did. It slightly broke above that high. And then we started making lower lows and lower highs. So we're creating liquidity after this break of structure. Until we're creating liquidity until we're not. So, when you're reading this, lower low, lower high, lower low, lower high, lower low, lower high, you can't predict a buy right here until you have confirmation above highs. That basically puts you back in line with the trend that was created after price broke above this area of resistance that put us in that bullish push phase. So, it'd be very misleading to try to take a buy right here, right? Because of this not being broken, which is the reason why I would say I would want to see this level broken and close below, and then enter on that trade to get on that candle to get into this. But this is obviously news, right? But as you can see, even if you were to trade this particular day here, it all makes sense. right? We know after the break of structure, we move in a lower low, lower high formation. So leading into New York session on this day, right? What did the market do? It made a lower high, right? And we had clear resistance right here. So unless we close above this high, we still can't buy it because we're just feeling imbalanced. We would just run right back into resistance. Do you see what I'm saying? So all we have to do is just read the data in this area, right? And if you're not sure, this is when the system definitely will come into play because if I put this on here, right, and I come to the chart, look what's sitting right there, an arrow. If I go to 15-minute time frame, there's a double arrow, right? So I know, okay, well, it looks like we're going to do what? Reject this area of resistance and drop towards this RTD. And what do? We get a close below all three moving averages, and you could enter. And if you miss that entry, that's fine because what does the market do? It breaks structure again, pulls back to an area of resistance filling imbalance, gives us an RTD below this low. You can just get in then. And this is a better entry because look, now we have a strong confirmation, all three moving averages, a bear spike. This is clearly black. And there's your 180 points right there. And the RTD gets taken out, I think. Yep. To the wick. See him? Do you see what I'm saying? Do you see how that works? Right? And you have to be able to, just understand each phase of the market, right? Once the market gives us the data, which is, from a few days ago, you read this data like a language based off of the universal pattern, guys, right? And you just have to understand how these move on higher time frames. Once we're in this leg or this leg of the market, whether we're creating or taking liquidity, it's going to move in the price action form of that phase, which would be lower low, lower high, or higher high, higher low, right? And that's why if you look at it on the 1 hour time frame, right, we were creating liquidity, right, in between this price action and exactly what I said, lower low, lower high, lower low formation until highs get broken. So right now we're at this level of support. We did feel some imbalance. If we break above this high, most likely we'll get a pullback, filling a gap in here, and we may get that move to the upside. If it continues to drop, then we'll look for opportunities to sell, or we'll wait since it already sold for an opportunity to buy unless we are truly reversing, right? So I'm hoping all this stuff makes sense, guys. Right. Like I said, if I had this analysis, look, I have arrows right here confirming it. I have a bullish spike, right? XP4 hasn't flipped yet. Stochastic is oversold. So if I get something that looks like this, I'm going to have the confidence to place a trade because it's too much of a coincidence that this signal is here. I have a break of structure and I know exactly what I need to see to get into buys, right? Because you're going to notice once you get the hang of it, the system and your analysis, everything starts to flow. Okay. All right. Right. Trade New York session. What is the best time to enter market? Well, trade New York session, it's not about the best time to enter market. I would say the best time to look for opportunities is after the stock market opens because a lot of the times, if you enter trades before 9:30, wherever your entry is, and you better have a really good entry, the market's going to come back to your entry. Okay. So it almost is better to just wait and see what the market does after that market open manipulation. And sometimes it does something very irregular. It'll sweep liquidity that you just didn't see with the naked eye. Because that's what gets me is if I enter too soon, stock market open, I'm in drawdown because I tried to guess that the market wasn't gonna pull back and take out sell side liquidity that I wasn't sure of, and you're gonna be in drawdown. So a lot of people say 10:15, 10:30 is where you can look for opportunities. But when you do that, a lot of the times you run the risk of missing a big move. And then sure, there's probably going to be a counter move that you can trade, but that's when the market's going to start consolidating, manipulating, and moving slow. And now you're stuck worried is it going to play out? That kind of happened to me on Friday. So, you know, you kind of have to pick your battles. I like to catch the impulsive move, right at 9:30 sometimes, or sometimes I'll wait. But if you catch that impulsive move, it usually gives you 500 points, and you could leave a runner. And if you leave a runner, then that should eventually win, or you may just be satisfied with your profit and you can end your day there, right? Whoever asked that question, could you demonstrate an example on NAS, please? Can you demonstrate using Blueprint, please? Can you do some live trading together? Yeah, bet you love that. Currency, please. Oh, I ain't trading currency. All right. NAS 100. Um, NAS 100 is another one. All right. So if you're looking at NAS 100, right, on a weekly time frame, all right, your goal is going to be to understand, why is the market up here, right? What phase are we in overall? And you read the data. Look, higher high, higher low, higher high. We broke above this high. We're in a bullish push phase, plain and simple. All right. Market is in a bullish push phase. We know this. No lows have been broken, right? So from here, if I go to the weekly time frame, right, I can just read the data the same way I would read an uptrend. Higher high, higher low, higher high, higher low. And like I said, I'm reading the language, right? This is a break of structure, right? Remember, we're looking at the biggest peaks, right? Now, I don't care about this and this, right? It's this and what happened after price broke out of this, right? Right here, we have our low, right? That's our low, high, low. All of this is a break of structure, all of that, right? Because that's a bullish push phase. But it already happened, so I can just read it. After the break of structure, we create liquidity down to a level of support, right? So I know that this is an RTP. So in my mind, the agenda is to get here, right? Now, in order for the market to trade towards buy side liquidity, we need to see a break of structure. Look, lower low, lower high, lower low, lower high, lower low, break of structure. All right. So now I have a double RTP because after this break of structure, what do? We create liquidity down to support, right? Which means this is another RTP, right? Now, what did the market do? It took out RTP exactly like it was supposed to. So what are we back in now? We're back in a bullish push phase. We broke above the highs. No lows have been broken, right? We're in a bullish push phase, right? So now that I know this, right, this is the daily time frame. This is the data I have to work with to place a trade on NAS 100. That's all I have to work with. So I got to read this data the same way I would read an uptrend. All right. So now, right, looking at the market made a higher high, a higher low, a higher high, a higher low, and a higher high. So if I go to 4-hour time frame, right, I know that right here I have a high, a low, and this is a break of structure, right, right here. So you see how I'm just reading the language, right? This is an RTP. Keep in mind, this is a 4-hour time frame now. And what is the market doing? Trending to the downside. We are creating liquidity. I just delete. We are creating liquidity against the trend, right? And taking out sell side liquidity. So if I wanted to trade any of these days within here, all I have to do is just read the data leading into each session, right? So if you look at the data on this day right here, right? This day, we'll just look at what is this? This is Monday, so this was Friday, right? How would I know to buy right here? But with an understanding that it's a low probability trade, right? Well, one, we know that we're trending to the downside, right? We can see clear imbalance in this candle, and we know how the market creates liquidity, right, against the trend in a lower low, lower high, lower low formation. This data is already there, right? So I just read in the data. So right here, I could say we have a break of structure, and actually we broke structure a few times. We broke structure here, and we want to make sure that we broke below these lows. We actually broke below these lows. So all this is a break of structure. right? So I have a break of structure right here, BOS, right? And then what comes after the break of structure? The next phase is to do what? Create liquidity, right? So if the next phase is to create liquidity, right, two things can happen. The market can continue to sell, which would be stupid because support is right here and it already sold, right? I could trade the push phase where I could see if the market's going to pull back. Now, leading into the New York session, this is where the market is. The market's right here, right? We're right here. So all I would have to do was say, okay, I know the market is in a bearish push phase when the market breaks below lows, and in order for this phase to end, a high has to be broken, right? So look, lower low, lower high, lower low, lower high, lower low that fails, and then a break of structure right here with a buy, right? So that right there pretty much told me that we're probably going to go up because now this gives me the opportunity to see the market pull back. And remember, like I said, this happened before New York session. So I have a pattern to the upside. I have a high, a low, this break of structure, this pullback. So, at this point, I could probably take a buy right here, but I'm not at the chart yet, right? So we keep going to lower time frames to get a better look at things. And now I have a trend. See, I have a trend here. So at market open, two things are going to happen, right? I can't sell unless I break lows, right? I know I can buy unless the market breaks highs. And what are we already doing? We're breaking highs. Who's talking? Right? I know I can buy if we're not breaking lows. So I already have what I consider to be an RTP right here, right? So all I gotta do is just keep reading the data. Oops. Okay, look, that's RTP right there, right? And like I said, sometimes you really gotta gauge it, right? Make sure that that wick is above that wick. So that candle is above this wick. That's considered the break of structure to me until it's not. And like I said, this data was already here. So look what happens. Market break structure again, right? And then at 9:30, it did exactly what I needed it to do, right? So 9:16 is right. So 1600 is right here. So that's 9 o'clock, right? Market comes down and creates liquidity to this support level. So above that wick is RTP. And now I'm sitting here trying to debate, okay, what is going to happen? Are we going to reject this and break lows? And if we break lows, right, I need to see a break of structure, a pullback, an RTD, and a reason to trade towards the downside. Or am I going to get bullish momentum? Well, we get an engulfing candle, right? So boom, right? We break structure, take out the RTP. We pull back one more time. You can see the wick right there. And then you can enter the trade. Now, this is on a 30-minute time frame, so it's not a small move. You enter the trade, and then look where it does. It goes up and fills the imbalance. Keep in mind, we have to remember, we're in the phase of creating liquidity, making what? Lower lows, lower highs, lower lows, lower highs. We cannot expect the market to do what? Come way up here, right? It could have, and we could still have been bearish, but we cannot try to hold trades going against a trend. So you catch your 1,000 points, you get out, and there you go. Because now we're going to be back in line with the trend, which what happened? It came back down and took out the RTD that would be below this low. Now, in the process of you analyzing this chart, right, what does the system say? Go to 30-minute time frame. Look, there are your arrows right here, right there. And then where were we when we were thinking about buying? Where were we? Above all three moving averages. We had a bullish spike and the XB4 was blue. Why would you sell? You see what I'm saying? Why would you sell? Right? And that's how you could have caught that move there on that day. Right? It's all about understanding each phase in the market. Right? And you could see it. I can't look at this color anymore. I'm so sick of that color. All right. You can see it right here. Right? We made a lower low that broke structure. Right? You see this? Like I said, it's a universal pattern, guys. You have to be able to see it at all angles, right? Break of structure. After the break of structure, what is the next phase? To create liquidity, just like the diagram. Break of structure, if I have an RTD, we create liquidity. You can only put RTD if you have a break of structure. The data was already there, right? The data was already here, right? This is not valid. RTD is not valid unless we break structure. Look, low, high, low, high, low, high, failure, break of structure, right? So if I can draw a trend, then we're creating liquidity. Now this could fail. Sometimes market does, reject and drop, right? But this would be a dumb trade after the market already sold. I mean, you can try and catch the crumbs, but the market sold from here. Just trying to catch this would be stupid. Just let it drop and then try to get the scenario down here somewhere. But as you can see, the momentum was, where it needed to be. The good thing about a trade like this is the fact that there could be a news event. That news event could come out negative, supporting the U.S. dollar, or come out positive, supporting U.S. dollar, and it's going to, give you added confirmation that the market's going to go to the upside. So a negative news event, if greater than predicted, comes out, or if it's negative, then the index is going to get strong. So that plays into that market pushing to the upside. So you have, tons of other forms of confirmation that can allow you to actually, place that trade with confidence, but you kind of have to understand, at least that market phase, because, the more confirmations you have, the better. I'm telling you, right? A negative news event is going to push price up if it's an index, or even with gold, right? A positive news event is going to push price down. So say the news event came out positive, right? Um, and we had this area of resistance, we probably would have not come up here. We probably would have continued to drop. You see what I'm saying? So there's a lot of other clues in there as well, right? And then you can see today um, we had the continuation of the pattern that was developing, right? The market pulled back, filling imbalance, right? Double confirmation, right? Double confirmation, entry, and then the market did drop. And as you can see, leading into the New York session today, what do we have? Oops, look at this one. What do we have? Double confirmation, a closure below, and what is the market doing now? If the market closed below, and this is RTD and sell side liquidity, this leg in the market is going to move in a what? Lower low, lower high, lower low formation, right? So look what happened, and this is kind of look at, you can see it on the 15-minute time frame. It was ugly price action, but look what happened. By understanding what this leg is, look, you had a break of structure right here, right there, right? This was your high, right? Next phase would be to do what? Great liquidity into an area of resistance. There's clear imbalance in between here. You can see it on here, right? I'll do it on here so you can see it, right? So look, right there. Boom, boom, and then right there. 15-minute time frame, you can see it, right? So you zoom in so you can see the imbalance, right? So before this candle formed, there was a gap in between here in that candle, right? This was your RTD, right? And this is not a small move. That's what I'm saying. Like that was your, excuse me, RTP, right? P, right? That was RTD. Market pulled back, building that imbalance, right? We understand the leg that this is, and your entry would be up here somewhere on these wicks or maybe on the push of one of these candles, right? I don't even get perfect wick entries. And the goal would be to take out RTD, right? So from there to there is 600 points. You stay in that trade, that's 1,300 points. That could be your trade for the day. That's it right there, right? That right there. And if you look at the diagram, right, the arrows were telling you where the market was going to go, right? We had arrows here, right? We had an arrow here, and we had a breakup structure, and we had a BOS and an RTD, right? This leg was this leg, was this leg. It came down and took out sell side liquidity, took out sell side liquidity on NAS. And that's how you could have caught that trade, at least at that time anyway. I don't know what time this is, but see at 9:30, we got this candle, right? So if you miss this trade, right, instead of chasing this, you just look at the data. Watch. Look, lower low, lower high, lower low, multiple breaks of structure, right? We broke structure here, here, and here. So this is what I'm saying. Look, low, high, breakup structure. What is the next phase? To create liquidity. See what I'm saying? You could have sold from there, and then the market's going to do what? Take out sell side liquidity, right? Below these wicks, those wicks, those wicks, right? Didn't take out the RTD.
Your mic went out, Jared.
Oh, can you hear me?
Yeah, you good now.
Yeah. Did you see how? I mean, this is consolidation, and you're still able to catch a trade just by understanding that phase, right? And I'm hoping y'all seeing this on this in this diagram, right? And you see how it's so easy to get lost in this area. Just looking at this data, it's very easy to get lost because things are so much unclear. But when I go to the 4 hour time frame, right? When I go to 4 hour time frame, things are a lot clearer because we know that this particular phase in the market is creating liquidity against a trend, and we know how it creates liquidity, like what movement is doing. It's doing lower lows and lower highs, right? Right? We see that this movement is lower low, lower high, lower low, lower high, right? We know that that's the movement that we're doing on the 4 hour time frame. So for the market to continue to the upside, highs have to be broken, right? This high would have to be broken for us to really continue. And then if you wanted to get in a little bit earlier, then this high would probably have to be broken since that's a bullish candle. We need to see that get broken and then a respect here for an opportunity to buy from there. Right? Do you see that? You know, so what I'm really trying to get you to grasp is, like I said, is the market phase and then just identifying highs and lows so you understand that you cannot just predict it. There has to be confirmation for each move. Okay. And then, like I said, if you're unsure, put the system on your chart. That's what I do. If I'm not sure, if I see something that's just not clear, I put a system on my chart and I go, well, there's arrows here. They're not valid until I get a breaker structure. Like right now, if I wanted to buy on the 4 hour time frame long term, I can't buy yet. It's not confirmed. Look, we're not above all three moving averages. We don't have any breaks of structure. I can't take that signal. You see what I'm saying? Right. All right. Somebody asked me about Blueprint. All right. Blueprint trading system. You use it the same exact way. Um, you just have a buy and sell level. So if you put Blueprint on your chart, right, And actually, I'd rather do it on that US 30. All right, if you put blueprint on your chart, right, you're gonna have this green line as your buy level, this green line as your sell level. All right. Now we know buys are valid above the buy level. We know sells are valid below the sell level, but that doesn't mean that automatically we're going to hit all these levels because we're above or below. All right. Now, what it can mean is where we may hit the first one or two levels, but if you're looking for an intraday move, then we would need more confirmation, right? So I'm going to put a couple of days on here so you can kind of get an idea of, I'll just put today and yesterday on here, right? So if I were to come to the chart today, right? And I specifically said, okay, price is above the buy level, right? And I just bought with no analysis, right? And we have this huge rejection here. Say that happened. I bought from here. I'm going to lose, right? So there has to be an analysis in place of why you would buy or sell along with the system telling you that we're above the buy or sell level. All right. So with this one, I mean, it's pretty blatant because we've already done this analysis. But if we're in a downtrend, right, I know anything against this trend is low probability, right? So I would still check market phase before I decided to take a buy or sell based off of what I see. All right. So, if I have this pattern drawn, right, and I see that we're above the buy level, and this is the beginning of the New York session, then I could look at it and say, well, we already bought three levels. I'm not chasing this. And my direction of bias is bearish. So I would say, okay, if we get below the sell level, along with my bias, then I know that I can trade to at least two levels, right? And as you can see, what happens is we do end up getting below the sell level, right? And after the sell level, we do what? We break structure. So, I could say, okay, we have that break of structure, we pull back, right? Unless we close above this high or we have a closure below the sell level, that's when I'll place my trade. And as you can see, if I made the decision to do either one, market goes to at least two sell levels, right? And I can get out of the trade, right? Now, along with this, if you had the system on your chart, right? So you have 1 minute scalper on your chart and you put that indicator on, you'll be able to see that. Make this two. Right. It wouldn't make sense to buy, right? Because we're at the top of the channel already at this point. We're at the very top of the channel. So we already know we're overbought. This is overbought, right? So it'd make more sense to sell, right? So, me, I would probably, like I said, I would probably sell anyway. And then once we close below the sell line, I take a second position. Because now I know we're going to take out RTD because I know sells are valid below the sell level, right? And that's how this particular indicator works. Now, unless you have an analysis in play, it's not going to work for you 100%, and it would make it really, really hard to create a risk to reward if you have no idea why the market is where it's at or why we're above the buy level. Because unless we're right on it, like right here, if you look at say if you came to the chart at the during Asian or London session, right, it would make sense to buy above the buy level because how does the market move or what did it do before? Let me put this back on here with the naked chart. Right, and this is like I said, right. So if you're looking at it on the 1 hour time frame, we'll go 30 minutes. Right? So say you're trading Asian in London, right? If you analyze the chart, right, like this, right? And this is RTD, you could read this data. You could say, okay, we made a lower low, a lower high, a lower low, a lower high, and a lower low. So when I read this, I mean, and this is what I mean by universal, guys, right? Look, That's a break of structure. If we have a break of structure, that means you have a mixture of what? Sellers and buyers. So look, and like I said, if this doesn't click with you guys, I don't know what to tell you. Look, that's a BOS, right? And then I don't know when you would come to the chart and see this, but look, right now you would see that we're above the buy level. Say you came and we saw that these two candles were formed right here. We're above the buy level, right? What comes after the break of structure? We create liquidity, right? And what is the market doing? It's making lower lows and lower highs. What did it just make? A low. So what should it make? A high. And where are we? Above the buy level. Buys about above the buy level. Do you see what I'm saying? Right? So, and then what do we have right here? We have imbalance, right? So say you took a buy right here during Asian session, it would make sense because what comes after the breakup structure? To buy. So buy two levels. Boom, 900 points, 1100 points. Now you're done. You see what I'm saying? Now London session starts. Market's probably right in this area, right? So we already know that the market's going to create liquidity against this trend in a what? Because we are creating liquidity, we're going to do what? We're going to make higher highs and higher lows. So what do? We made a higher high and a higher low, right? We're above the buy level. So unless lows don't get broken, what are we going to do? We're going to buy, right? Two levels during London, right? Do you see what I'm saying? That's how this works. That's how you know, right? Just like right here, right? We made a lower low. We just took money, right? Now we're going to do what? Most likely create money, and we're above the buy level. So what's the market probably going to do? Move up two levels. What clues do we have? Well, we have all this imbalance right here. You see what I'm saying? Right? Well, hope that helps. Whoever asked that. This indicator works swing trade better. Uh, it, it can work for swing trades if you want to wait for that type of opportunity. Whoever asked that, but you know that's how that works, guys. And like I said, when you put the system on the chart, right, you have confirmation. So if I wanted to take buys, I could still wait for confirmations, right? Arrows, closure above all three. We have a MACD flip. You know, we're probably going to move to the upside. Mhm. All right. So I'm going to unmute this and see if anybody has a question. I'm about to hop off here soon. All right. I think you guys are unmuted. Does anybody have a question? Anyone? Are you unmuted? Allow people to unmute themselves. Yes. All right. Does anybody have a question? Anyone that they'd like to ask through the mic, or they can type it in the chat? Hello, hello? Nobody? After all that, nobody has a question. No questions? All right. All right. Somebody said they wanted to see this on currency. I'm not really in the mood to look at currency, but I don't know what pair. Yeah, because currency has been going. GBP USD has been moving like shit. EUR USD maybe. Yeah. So this one's been moving smoother. All right. So let's look at EUR USD. All right. So I haven't really traded this pair, but sideways. We can get an idea of what the market is doing. All right. So This is EURUSD, right? So look on the weekly time frame. Let me zoom out so I can get a look. All right, look, market is trending to the downside, right? We need to understand what this is. So look, low, high, breakup structure, all right? So we know that we're creating liquidity right now, overall, right? This is BOS. I'm gonna have to type. That's why I keep spelling words wrong. Typing too fast. All right, BOS, right? This is RTP, RTD, and we know we're creating liquidity, right? And we're creating liquidity in a what? We're creating liquidity in a higher high, higher low, higher high formation, right? And we've been consolidating, so this price action is a little bit funky, but we can still kind of get an idea of what's going on based off of the phase of the market over here, right? We know that we broke structure here. So in my mind, right, this is a low, high breakup structure. We create liquidity and we started making what? Higher highs, higher low. This could be a higher high. Let's see. Yep, that's a higher high, right? So now I can understand what this is, right? We have a trend here. I can understand that we're creating liquidity after this breakup structure. So when I go to the daily time frame, right, I could see that this is a BOS, right? This is an RTP, right? We went into a bullish push. Oh shit. How the hell did I do that? All right. We went into a bullish push phase, right? Lows didn't get broken. So we had a mini breakup structure here, and then the market started to sell off, right? This is on the daily time frame, right? So the market sold off in a lower low, lower high formation, right? So as I keep going down in time frames, and this is why I don't like this pair because it's so broad, but I want to stay on the daily just to get a better view, right? Leading into whatever days these are, because I guess I'm gonna look at current data. We were taking liquidity. Look, we took liquidity here, right? We took liquidity here, and then we ran into support because we filled some imbalance, right? So I know the market's doing what now? Lower low, lower high, lower low, lower high, lower low, and we're creating liquidity, right? Against this trend, right? So as I keep going down, right? I understand what this leg in the market is, right? We understand that that leg is creating liquidity because what did we do? We broke above a high. Look, lower low, lower high, low that failed, and a break of structure. So now I know that against this trend, we're just pulling back. So that's the data I have to work with, right? So look, I don't know what days we can look at in this, but um, if you look, we'll look at this day because that's probably the easiest one to look at for now, right? Because we got weird price action over here. But say we were going to trade this New York session right here, right? That New York session, right? You could see that once price broke above this high, we remain bullish. We're in a bullish push phase. This data was already there by the time we got to the chart, right? So how would I read this? Well, higher high, higher low, break of structure. We broke above this high, right? So you see how I have a high here, I have a high here, right? I have a low, and I have imbalance in this candle with support. The data is already there because I'm still reading. After the break of structure, we pulled back to this area of support. So I know we're still in a bullish push phase. So we didn't come way down here, right? And what did this market start doing? It started taking out buy side liquidity, right? So if you look closely, this wick took out the RTP that was created right there. So we have another break of structure, all right? So as price action develops, I don't like to trade push phases. So if I look at this, right, we're already broke above the high. We already broke above this high. Market pulls back. So this one is kind of tricky to say how I would read this. because of the imbalance in this candle. See, there's two ways to win here, right? You have a high, a low, this breakup structure, right? At stock market open, the market pulls back and fills the imbalance. And as you can see, I'll zoom in on it. We have imbalance right here, right? So if this is an RTP or an ER, right, then I'd be looking to trade towards an RTB if we reject this area of support. And as you can see, this leg took out the RTP in a what? Higher high, higher low, higher high, higher low formation. And then we broke structure, leaving imbalance. So that completes my pattern, right? So this would be my area of interest. And if I went to 5 minute time frame, right, you can see that I have a nice RTP to trade towards, right? Now, in order to trade towards RTP, we need to see a break of structure. So you have a lower low, a lower high, a lower low, a lower high, a lower low, and a candle that closes above the high right here, right? So this candle break structure, right? Market does pull back to support, and that would be your entry right there. And as you can see, that entry takes out RTP. That's only 10 points. This is the reason why I don't trade currency. Like, who do I want? Wants 10 points. All right. But as you can see, market does go up, takes out liquidity, pulls back, goes up again, and then I guess this is some type of news candle. There was an imbalance left right here that needed to get snagged. I definitely probably wouldn't have seen that at that time, but this is currency. Now, as far as it confirming this analysis, right? On lower time frames, we may have some type of confirmation in this area. We'd have to go to 5 minute time frame and see what the system says. All right. And as you can see, system did confirm it. Look, you have your high, your low, break of structure. There's your arrow. There's your close above all three moving averages. Oversold XB4 flip. Right. And there's your money, 20 pips. So, that's currency. But like I said, it's all understanding what phase the market is in and then what phase it's in while it's in that phase. If that makes sense, guys. All right. This one's probably a little confusing because it's freaking currency. Like I hate trading currency, but if you can kind of see it how I'm seeing it now, it all makes sense. Right. If we look at today, yeah, even on this day, you had an opportunity to buy again, right? Even right here, you had an opportunity to buy again, right? Because leading into New York session, this is where the market is, right there at the beginning of session, right? So look, just read the data. Higher high, higher low, higher high, higher low, higher high. Right there is a break of structure, just very faintly broke structure, right? So you have a high and a low, right? This would be your RTP, right? And then you can see all the imbalance in these candles. Look, there's 1, 2, 3, 4, 5, 6 consecutive bearish candles and then order block right here, right? So if that's what you see, there's no way you're gonna, if you have this markup like that, there's no way you're gonna sell. You're gonna buy RTP and buy side liquidity because the market is trading to the upside. The only reason to sell would be to break lows. We'd have to break lows like this. We'd be looking for sales. And even if it did sell, we need to see a pullback in an RTD to trade toward. And it would be low probability going against the overall trend. So, it could sell to the floor and it wouldn't be a smart trade to take. Right. And as you can see, right, because the current data was still a bullish push phase above this high, that's the reason why it's still bought. Right. Do you see how once we broke above this high, we stayed bullish no matter what? Higher high, higher low, higher high, higher low. higher high, higher low, higher high. And even though we had a break of structure right here, it just came back down to that same support level and went right back into a push phase. See what I'm saying? Right? Because what happened is now this is your new RTP, right? And this took out sell side liquidity, right? So there's nowhere else for the market to go but up, right? There's nowhere else for it to go, right? And if it breaks above the high of the previous move, we know where we're going to the upside. And I think it gapped up. It will I think at the market open it gapped yesterday above previous structure, which is the reason why this RTP got taken out. Right. And I'm pretty sure the system confirmed that one too. Look, yep, right here. See, arrow, bullish spike, XP4 flip, close above all three moving averages, and we take our RTP again. All right. When you're trying to read your highs and lows, guys, on every time frame, it's the biggest peaks, guys. Remember the big peaks, the biggest peaks, right? Not this inner stuff, the big ones. Right. Right. Any questions, guys? Anybody have a question? No questions. I want to interested by this indicator. Okay. I don't know. Gopi, whoever's GM, you can message me after this call, and I'll show you the next steps to get into this program. So before Asian, London, or New York, you can set up your trade based on the pattern before, as long as it is fulfilled what you're looking for. Correct. You can. You can definitely analyze a chart during Asian and London to set you up leading into New York, but you still want to, keep checking to see what happened during those sessions to make sure your analysis didn't get disqualified. Market does some funky things during Asian and London sometimes. Sometimes you get a lot of price movement during London. So yeah, you can definitely analyze your chart. I personally don't do that. I probably should. But the reason why I don't do that is because if I see something that I think is a sure thing, I may be tempted to buy or place a trade out of session. And that sometimes would hurt me. So if y'all notice, I don't like the opportunity to analyze a chart and then have time to reanalyze it. So if you notice, I analyze a chart literally 10 minutes before the session, before the stock market opens. Like I'll wait to 9:17 to analyze a chart, or sometimes it'll be 9:27, 3 minutes to stock market open, and I'm analyzing the chart. The reason why I do that is because usually my first analysis is correct, and I don't want to sit there and psych myself out reanalyzing, thinking that my first analysis is wrong. So if I don't have enough time, I make my first decision, I keep it, and then I go. Now there are some times where I'll analyze a chart, but I'll still wait to see if it develops, and there'll be times where it's playing out, but I was looking for something else, and I won't place a trade, and I'll miss the trade. Right? It's just the way it goes, and that happens a lot at stock market open, because sometimes stock market open you get an initial push, and then sometimes you get manipulation. And it sucks to enter the trade after FOMO and you're in drawdown. And that happens to me a lot. That happened to me 2 weeks ago. And I was in drawdown every trade I took the entire week. So, you're going to go through some spells, but, a lot of the times, you'll get that initial push and there'll be a better entry right at 10:30, 10:45. You get a better entry if you'd have just waited. So, I would definitely say, wait for the New York session and, look for your opportunity to enter the trades then based off of the phase the market is in. If you're swing trading, then, I would say, enter a trade during London. If you're holding it, that way you're not really worried about it coming back to your entry. But, with US 30, it's more of a work smarter, not harder type thing. Like if you can just think of how to trade this pair less and make money, you're going to make a lot of money. You know, 500 points is all you need to make six figures, just 500, and you only need to catch that twice or three times a week. That's it. If you're trading every single day, you're giving yourself an opportunity to lose more than you win. So if I have two great wins like today, I don't have to trade the rest of the week for what I caught today. You know what I'm saying? Like I could say, oh, my week's done. That would be the smart thing to do, right? But y'all won't do that. Y'all trade every single day, and you're gonna have three good days and then one bad day, and that one bad day will blow out all your profit. You know, just keep that in mind. All right. Anybody else have a question? Anyone? If you want to unmute and ask, you can. Nobody? You all got it? All right. And somebody asked me, was this a new system? No, I just got sick of looking at the gray screen. So this is still 1 minute scalper. I just changed the color. It's no different. All right. Because somebody thought that this was new. I'm like, no, this is not new. All right. All right. We can't unmute. I said it to unmute. Hold up. It says try to unmute now. Allow participant to unmute themselves. Yes. I thought I had that checked. Does anybody have a question now that you should be able to unmute yourself now? If you can't, then I just don't know how to work this thing. Does anybody have a question?
Thanks, Jeremy, for nice presentation. One thing, this will work only MT4. You have any chances MT4 5 down the road?
For what now?
MT5?
No, because I don't even have access to MT5 anymore. The only reason why I have access to MT4 is because Hugo's Way and Hero FX apparently have a replica of this platform, and I'm able to use it because I'm in the United States. So I don't even have access to MT5. Like there's no broker that'll let me download it.
Oh, okay. Thank you.
Yeah, I mean this system is for people who want to use Hugo's Way and Hero FX to actually have the system on your chart. But if you're in the US and you're trading live on Hugo's Way, then I would definitely just put small amounts in your account. But if you're gonna use a big account, use Sway Market. Like when I'm trading, I'm placing trades on Hugo's Way and I'm placing trades on Sway Market. So the system, like I said, the system is only there to confirm your analysis, guys. Like if y'all are trying to use the system and want to have it on the platform you're trading on, because as a luxury, I'm sorry, I don't provide that. You know what I mean? I ain't putting the system on TradeView. I don't even know I don't even know the steps to do that. I don't know how. I ain't paying nobody to code this on TradeView for me. So, a lot of people keep asking me that. And I'm like, I have no plans for that. Once I have no access to MT4, that I'm not going to be using the system anymore. But by then, you should be able to read the chart. All right. The system is training wheels. You shouldn't need the system to confirm your analysis. At some point, you have to be able to do it on your own. All right. The system is training wheels. Right. If I can find somebody who can, code it on TradeView, so be it. But in my experience, every time I ask somebody to code something for me, they won't give it to me. They want to partner with me, which means I don't have 100% access to it. That means they can take it from me. You see what I'm saying? So it's not the best business deal. Just like if I try to make a bot, the guy's not going to give me the bot. He's going to basically rent it to me. You see what I'm saying? You know what I mean? Because I had somebody that created the MOS for MT5 and he wouldn't give it to me. He was like, no, we can do a partnership. And I'm like, no, fuck that. I'm not doing a partnership. I'll buy it and it's mine. But, not doing that. So I don't have any plans for MT5 because I don't have access to it. I
But
may be if I move, I'm thinking about moving out of the country. So if I move, then I'll have access to it again. But right now, um, it's Hugo's Way or Hero FX.
but one thing is you mentioned somewhere in your advertising is EA. It's not EA, it's indicator, am I right? Expert, it is not expert as well, advisor to take the trades automatically, am I right?
The Moss is an EA.
Oh yeah.
The Moss gets
Oh,
installed as an EA.
oh, automatically takes the trades.
No, EA doesn't mean automatically takes trades. Like everybody thinks an expert advisor is not a trading bot. It's not. It
Oh,
doesn't have to be a trading bot.
okay.
Yeah, and EA is just um, another form of an indicator, or it can be installed as an expert advisor. But if it's a bot, bots get installed. A lot of bots get installed as expert advisors, but this particular indicator, it installs differently. It installs as an expert advisor. So people seem to think it trades for you. This allows you to enter multiple positions at the same price, close
Okay.
positions, go to break even with one click. That's what this allows you to do. But yeah, I don't have an EA,
Okay.
for people to
What about
trade with.
I saw that one. You have alert system too. Sometimes it gives the alerts, like with the trade opportunity comes,
Alerts. I'm not sure what you're talking about, but
like a buy and sell signal alerts or something like that.
I mean, every system gives you a buy and sell signal that I come
Okay.
up with. But
But I saw the for beginning of the your session, I saw that one. There is alerts popping up from your system. It's okay. Yeah, never mind.
okay, all right. Yeah, I don't know.
Mm.
Yeah, but yeah, I mean, I'm not a techie, so I can't create it for TradeView, and I'm not gonna lie, like I personally, because I've been on MT for so long, I don't even like marking my chart up on TradeView.
Yeah.
I
Nowadays, most of
don't.
the people they rely on the trading view, That's why.
I don't I just don't like marking my chart up on it. I think I see things clearer with these candles. But I mean,
Yeah.
I do when I want to mark up my risk to reward, I'll mark it up. But
Mm.
you know, until I absolutely don't have this anymore, I'm going to keep using MT5, I mean
Yeah.
MT4 to mark up my chart.
Yeah.
This looks cleaner to me than TradeView, and I don't need all those tools on TradeView. All I need is a line in this to mark
Yeah.
up a chart. So, you know, but um, I can mark up the chart pretty cleanly on Sway Market as well. So I mean,
Last
um,
question is for me is how do you indicating the your strength of the currencies, USD and CFD based on the do you have any fundamentals and anything you added that one or just like based on the COD data or whatever the data you uses for that one strength?
well, I mean, the U.S. currency you can use the forexfactory.com and check out the outcome of the news event. So if the news event comes out positive, that strengthens the U.S. dollar usually,
Mm.
unless it's unemployment claims. That usually it needs to come out less to strengthen the dollar. So if you're trading GBP USD or EUR USD, and a majority of the news events come out positive and greater than forecast is good for currency, then a lot of the time you're going to get bullish momentum. However, you want those news events to line up with the trend and what phase the market is in. So, for example, if I were to be trading the market and say this is the data I saw, and right here I claimed this as a break of structure, right? And
Mhm.
when the news event came out, we were in a push phase. Well, the news event is going to push price up, right?
Mm.
And when it pushes price up, the next phase is still going to be to create liquidity. So chasing this while the market's in a push phase would kind of not would be counterintuitive unless you were able to see this um, on a lower time frame. Because I guarantee this was a news event, and as you can see, we have a break of structure, a pullback, and then you have an opportunity to enter the trade here because the news came out positive, and actually it probably came out negative and pushed price up because EUR got stronger because of the negative news event. And then what happens is you're going to expect the market to stay above this level, and then you're going to get stopped out right here if you don't close, right? But
Mhm.
what I would see is a break of structure and imbalance, and I would wait for the news event to end, and then I already know that I still can't buy because we're in a push phase. So, you would want to wait for the market to finish creating liquidity, and now you look for the buys off of that zone because that's what's going to happen. Like the news event is going to come out, right? Continue to push price up in the push phase, and then do what? Go into the phase that's next, which is creating liquidity against the trend to trade towards RTP. You see what I'm saying? But there might be some times where it works out where you have this particular pattern, right? And the news event comes out negative and EUR gets strong, but this is the beginning of the New York session. The market's making higher highs and higher lows, right? So this kind of goes in line with your analysis because our goal is to take out RTP. We're down here. So if the news event comes out negative, right, then where would the market most likely go? Up because EUR is stronger than USD at that current time, which is in line with my analysis and the trend. You see what I'm saying? So this one would make sense to buy or trade this news event, right? Because only two things could happen. News event could come out positive and USD would get strong, and then it would go this way, and I wouldn't be looking to take this trade because this goes against the trend. You see what I'm saying?
Mm.
Right. So it's, like I said, it's, you can use that as a bias, but a lot of the times the market has already moved quite a bit before the news event comes out. So you're going to get a late entry. It's almost like you have to guess where the market's going to go based on the news event to get in that event with a good risk to reward. You'd have to get in before the outcome, where the outcome goes against where you got in. Do you see what I'm saying? So, it's not always great to trade high impact news, but a lot of the times if you let that news event go, the next phase after whatever phase it put itself in will give you an opportunity to trade. Like, you could see this and take a sell right here when you see rejection because there's imbalance in this candle and you know what the next phase is after a break of structure. The next phase is to create liquidity. It would make sense for us to reject this and go this way. Do you see what I'm saying? Because now you have a high, a low, a break of structure. News push price up. There's probably resistance here, right? So it makes sense for the market to drop and you get a low probability trade that gives you, high probability, quality. That's 50 pips right there, right? Because you know what's next, right? We know after we take money, we have to create money to go higher so we can trade the phase of creating money against the trend. Do you see what I'm saying? I don't know if that makes sense, but
Yeah.
yeah, yeah. I mean, what I've noticed, especially even with US 30, is that if there's a news event that pushes price, like something like NFP, don't try to catch NFP, catch the counter move, right? If it's CPI, don't try to catch the CPI move, catch the move after CPI, right? Do that, right? All right, guys. So I think that's going to do it for today. Hopefully you guys got some value out of this. If you didn't understand any of what I said, then we need to schedule your one-on-one. And if like I said, if you've been analyzing the charts, based off of trend lines, patterns, head and shoulders, all that crap, until you can get out of that, man, you're going to struggle with, a very low win rate. You're not going to win a lot, man. It's just those patterns, they work, but only when you understand liquidity and how to identify it at market phase. Those patterns are not going to work for you if you don't understand that, at least not consistently. You know what I mean? They're not going to work, right? Prime example, right? Inverse head and shoulders. You would buy right here, you would lose, right? Shoulder, head, shoulder. You'd see that and you'd lose, right? So, and these are things that I'm trying to, show you is that, you're going to be very inconsistent with that type of mindset. Right? All right. But that's it, guys. Hope you guys got some value out of this, and hopefully this wasn't too long, and it'll allow me to post it in the Telegram and in the paid Facebook group. All right. All right. Thanks for asking these questions. Joined late, so may this be uploaded? Yeah, whoever said that. All right, guys. All right, you guys have a good one, and I'll post this when it's finished uploading. Have a good one, guys.